Well, good afternoon, everyone. My name is Abhimanyu Arora. First of all, thank you, everyone, to taking out this time this afternoon, this Thursday. We'll talking about a very important topic today, uh, which we picked up on a public demand and a kind of we did a survey that we would require a kind of a presentation on this particular topic. And that is why we have with us our speaker, Mr. Sameer Bhandari, our co-founder and CFO, which I'll just give you the introduction. The topic which we will talk about today is where should you invest today? SM REITs, FDs, or bonds? Well, to talk about it, let me first take you through the leadership team at HBITS. Mr. Shiv Parekh, who is a founder and CEO. He's a Harvard graduate, Stanford alumni, Forbes 30 under 30, 2022, Business World Disrupt 30 under 30, 2022. Background, if we talk about, he comes from Citi and Stanford Management Company. Well, to talk about Sameer, who is, of course, our speaker and an expert to talk about different products. Well, he is a chartered accountant batch 1987. I am batch 1989. 89 to 96, he was actually working in Mumbai and then to Hong Kong with Bank of America, from which from 96 to 99, he was in UBS Singapore as a managing director. From 99 September till 2008 June, he was at JP Morgan Bank Singapore. From June 2008 to 2021, he started with Lehman, which was further taken over by Nomura Securities. He was co-heading sales globally, fixed income, equity, part of the global exec. Just to as well let you know, he comes from a background of diverse experience, managed all asset class. And thank you, Sameer, for being a part of this particular presentation. Just to take it forward and about this particular, how we want to talk about this webinar is around 20-25 minutes on the topic. And if there are any questions, I'll request all of you to kind of type the questions for which we'll be able to answer in the second part of the particular webinar. A little bit about myself. I have been with this organization from almost day one. It's been close to 6 years now. Overall, 25 years experience. I worked with banks like HDFC, HSBC, DBS Singapore, and Kotak. I've done my finance participation course from IIM Calcutta. So let's start off. And the topic would revolve around this particular thing, changing investors' behavior. Well, investors today are increasingly seeking stable, predictable returns without market volatility. When I was a wealth manager, we used to talk about FDs, bonds, mutual funds, fixed income products, and we kind of understood that people are when they are conservative, they want to park money into fixed income products, where there are kind of returns which will come to them on a quarterly basis or a monthly basis or an annual basis. Well, if you look at from another angle, over 55% of our Indian financial savings is still in FDs, fixed deposits, as returns in FDs and bonds barely cover actual inflation. Hence, it leads to negative real returns. And that's the place where SM REITs comes into picture, beating certain particular point of FD returns. Well, I have Sameer. Sameer, I'll happen to ask you a few questions on from the client's point of view and even from point of view from wealth managers, that why are SM REITs trending across financial platforms and social media? So that's a question for you.
Firstly, thank you, Abhimanyu, and great to be here on this webinar. Um, I think most of the people are looking for stable returns, and when I talk about stable returns, I talk about stability in income. They should know exactly what they're going to get. They should know the tenor. I.e., are they going to get it monthly, quarterly, or annually? So all these things should be very, very clear to them. And I think that becomes very, very important. So there is obviously a rise in demand for stable passive income. Market volatility has been there, so people are looking for stability. So real estate earlier was seen as very, very illiquid. You could buy an asset, and when you want to actually go and sell, you actually can't sell it. Whereas SM REITs has actually changed that. There's growing awareness, a lot about regulated alternative assets. Plus, SM REITs are going to be listed on the exchange, so that obviously helps the liquidity. and the yield potential, I think, which is the key thing. Whereas fixed deposits and fixed bonds give you a certain return, but you don't get really any capital appreciation as such. SM REITs also allows you to get not only fixed returns plus capital appreciation. You're on mute, Abhimanyu.
My bad. So sorry for that. Well, while we were dealing with HNIs and family offices already investing into this category, how would you kind of talk about how they could adopt such kind of a product?
So definitely, HNIs and family offices obviously want to diversify their investments. So SM REITs then becomes very, very powerful in investing for families. The main reason again being it's a product where you can liquidate your units anytime. It's listed on the exchange. It gives you very good returns, and we'll talk about the returns later, but it gives you at least 8% return on a quarterly basis. Plus, you get potential capital appreciation of 6 to 7%. A lot of wealth managers also are coming to us because they also want to give diversification to their clients. And hence, I think this product, if you ask me, over time, as people come to know a lot more about it, people are more educated about it, this product actually will go across not only HNIs and family offices, but the classic retail person who would then be investing in these products.
Fair enough. And when we talk about this, how did SM REITs originate? Like when we, at HBITS particularly.
So when we started HBITS, which was late 2018, we did our first asset in 2019. The genesis of that was really to make sure and help retail be able to participate in this very, very lucrative asset class. I mean, most of the REITs, if you see, are actually invested by institutional players. So Shiv Parekh, who founded this company, wanted to actually widen it to retail so that retail could also participate. And that was really the genesis. And that's how we started this. Obviously, it also solves the problem of accessibility in commercial real estate. As we all know, commercial real estate can be quite large. I mean, you can have 50 crores, 100 crores, 200 crores also. And so, as an individual, it's very difficult to participate in this lucrative asset class. And more recently, SEBI came out with their regulation saying that they want to actually make this kosher, or they may say they just want to regulate this. And that's obviously lent a lot of wings to this asset class. So the vision really is to democratize commercial real estate, give it to retail to participate into one of the most lucrative asset classes.
Something like stock market of real estate.
Absolutely. You got it.
Mhm. Well, SM REITs, a new asset class, which we've been talking about, something a little bit more detailed, or if you can just elaborate what they're backed by.
Of course. So, firstly, it's regulated by SEBI. HBITS has got its license April 1 from SEBI, and we will be coming up with SM REIT IPOs. This will allow retail investors to access institutional grade A commercial properties, which will be backed by grade A tenants. The rental income which you will receive will be quarterly. The management of these assets would be done by HBITS. The minimum ticket size for this would be 10 lakhs. Earlier, in the unregulated space, we would do 25 to 30 lakhs. Now that's come down to 10 lakhs, and we expect SEBI to, in fact, lower the ticket size even further over time. And then we'll talk about how tax efficient the structure is also in later slides.
Well, of course, how do SM REITs work, which you've already talked about, 10 lakhs being a ticket sized minimum?
So effectively, it's money is so we identify an asset. We look at the micro market. We say, okay, this is the property we would like to buy. We enter into a term sheet with the seller of the asset. Here, then we'll do an SM REIT IPO, and we will get money, people to apply onto this IPO, and money will be pooled in to buy the premium pre-lease properties. The rental income, as I mentioned to you, would be distributed quarterly to investors. The units will be listed either on NSE or BSE. The small ticket sizes, as I mentioned, around 10 lakhs or larger, but the minimum ticket size is 10 lakhs. Example being, 50,000 square feet office in BKC leads to a global IT firm. Investors earn rent plus long-term capital appreciation. Typically, if the asset is good, we expect long-term appreciation of anything between 5 and 7% per annum, giving a total IRR of around 14 to 17%.
That's great. And if we look at where do SM REITs fit in the fixed income mix?
So if you ask me personally, if you look at fixed deposits, it's for a fixed tenor and you get a fixed yield. And we'll compare the yields, typically 6.5%. SM REITs actually give you an yield of around 8%, which is tax-free. And I'll explain how it is tax-free. And you get capital appreciation, which you actually don't get in fixed deposits. So that is the benefit of SM REITs versus fixed deposits or bonds. If you look at equities, how does SM REITs compare to equities? Equities, as we all know, go through a lot of volatility. Around the Asian crisis, around the 2008 crisis, obviously equities were extremely volatile. SM REITs, we feel that they'll be a very stable asset class, which will give you like a fixed yield plus capital appreciation, and it's always backed by a real asset. So whatever happens, the commercial real estate, completed commercial real estate property will always be there, actually backing the asset class.
Nice. Can SM REITs be a part of an investor's debt allocation?
Absolutely. I do feel SM REITs over time, as people get educated, will actually take a lot of market share from fixed deposit, from fixed bonds, and it will become a core income asset class. This is especially good for conservative people, for retired people, and some of the new age investors who want to create a fixed income asset class in their portfolio.
Classic, because there is a kind of shift of even a person who is, let's say, a tech person employed, he's working. Primarily, he wants his money to be safe. A conservative guy, he can, of course, imply the money over here.
Absolutely.
Great. And what makes SM REITs reliable for consistent rental returns? Of course, the bucks.
I guess the key thing is, firstly, these are completed grade A properties. We will acquire the property which is already pre-leased to a tenant. The tenant typically will be a multinational or a large Indian corporate. The leases are typically long-term, so 5 years, 3 years leases, or sometimes even longer. We obviously conduct due diligence both on the legal side, on the property side, to make sure that the asset is actually good. We actually look at the micro market also to see the vacancy there. We have third-party trustees and custodians to guard the investors. And as I mentioned to you earlier, the rental payments are contractual, they're stable, you get these quarterly, and this asset class is going to be a lot less volatile as compared to equities.
Well, another question is that when SEBI comes into picture, what will be their role?
So effectively, SEBI will give investors protection, right? When they are there, they formalized the SM REITs guidelines in 23-24. They will bring transparency, disclosure, and governance. If investors have issues, they can always go to SEBI if the management is not able to solve it. Plus, the units are going to be listed on the exchange. Because they're listed on the exchange, you could get a loan against it. You could sell your assets sell your units anytime, and you get access to a trusted institutional grade A commercial real estate, which was earlier not the case. So SEBI will play a very important role in this.
Agree with you totally. Of course, it gives a very good standpoint from SEBI. So how does SEBI's role in the product protect investors?
I guess this is what we spoke earlier also. There'll be a lot of transparency in pricing, distribution, because it's regulated by SEBI. It's going to be absolutely safe. There'll be mandated disclosures, audits which would have to be done on a frequent basis. The valuation of the properties will also have to be done on a yearly basis. And everything pretty much what we do will be done by capital market rules.
So are we saying, Samir, that when we launch a particular IPO, okay, all these things will be shared with the customer in advance?
Absolutely.
Great. Well, what is our outlook on fixed income investing in India? Particularly question for you, because with the experience you have come in and where you looked at fixed income markets, how do SM REITs would align with it?
So I guess one of the things to keep in mind is interest rates have been coming down. If you see fixed deposits, which were yielding 7.5 to 9%, and now are now down to 6.5%. Um, Maybe they'll go down another 25 basis points. I don't really see it going down more than that, but definitely rates are much lower. Similarly, AAA bonds, if you buy, you don't really get yields of more than 8% as such. Where SM REITs helps, it's not only gives you fixed yield, plus it gives you the upside also. And we are reasonably confident that if a property is identified well, you could get anything between 14 and 17%. Case in point being, we are at present exiting an asset which will give a IRR of 14.5%. And we are in the process of exiting another asset where we think the IRR will be between 14.5 and 15%. So these kind of IRRs you actually don't get in fixed deposits, you don't get in mutual funds with fixed income. Even with large cap mutual funds on equities, the average returns are between 11 and 12%. And hence, I do feel that SMEs really align very well and give much better returns to investors.
Noted. Well, while we speak about it, there is, of course, talk about FDs versus bond, quick comparison. Well, probably I'll just take it through to everyone. Uh, when we talk about SM REITs, as Samir correctly, rightly mentioned, we talk about 8% plus, and we talk about the taxation, of course. The rentals are tax free, uh, liquidity is moderate to high, risk is low to medium, capital appreciation is, of course, there as comparison to FDs, where the principal does not move ahead in FDs. In FDs, it is 6 to 6.5%. It is fully taxable. Liquidity is low, risk is low, capital appreciation is not there. As we talk, the principal remains same. Bonds around 6.5% to 8%. It depends on the bond type, what kind of a tax treatment will be done on that. And liquidity is fairly medium. And it as well varies according to the paper which you pick up. And the capital appreciation is limited. Before I go further, of course, Samir, you want to highlight more on the tax-free income on the 8%.
Sure, the way we are structuring the SM REITs, it's a return of capital. So all the rental income which you will be paid to you will be tax free in your hands. This will then reduce the capital over time. So to give you an example, if you had invested 100 rupees, after 5 years, the capital would be 60. And when you sell that asset, say you sell it at 120, you would pay long-term capital gain on 60 at 12.5%. So it's a very tax efficient structure approved by SEBI. And in terms of when you compare it to fixed deposit and bonds, obviously it's much, much better. If you see fixed deposits, they barely cover inflation after tax, considering that inflation is around 5%. So the real rates of return are actually negative. So this as an asset class, given the nature of the tax treatment on rents and the capital appreciation, which is expected around 5 to 7%, is a fantastic asset class.
So if I have to compare a little bit, Samir, like, we talk about 8% tax-free. So it's actually 8% tax-free paid out quarterly. That is number one. And if I calculate it in a backward manner, it would be basically a 10% taxable income.
No, it's even more. In fact, if you're in the 30% tax bracket, it's more like 11.5%.
11.5% versus FD's 6
Yeah,
to 6.5% at this
that's
moment.
correct.
And we're just talking about the ROI and not the IRRs right now.
That is correct.
Well, can you really invest in big commercial properties with a small amount now?
Absolutely. As I mentioned, the minimum ticket size now for you is only 10 lakhs. We will be buying properties worth 200, 250, 300 crores, but you'll be putting in only 10 lakhs to own a unit of that property.
Sure, of course. Uh, Smart strategy for building a diversified portfolio. Something cue from your side.
So I guess this is what we've discussed in these slides previously. So I don't want to keep talking about it, but I do feel SM REITs is an essential part of your portfolio. And within the fixed income, so assuming you own 60 or 70% fixed income, I would say of that, at least one third, you should have it in SM REITs because of the benefit of capital appreciation and long term wealth creation.
Well, how is an SM REIT different from a mutual fund? Given an example, like if a SM REIT kind of product is giving you like 14 to 15% IRR versus a mutual fund.
So I guess two differences. One is a mutual fund pools money into stocks or bonds. And then, whereas SM REIT actually invests in a real income generating commercial property, which you know exactly the property which you are buying into. Whereas a mutual fund, you can obviously see the list of stocks they have or bonds they have. But in this case, you know exactly which property you're buying. And whereas mutual funds can be volatile, SM REITs will offer regular rental income, real asset backing, and I expect them to be a lot less volatile than mutual funds.
So can I say, Samir, we used to talk about low risk, low return, high risk, high return. SM REITs have kind of changed the equation, low risk to moderately high return,
I would agree with you.
right? Can I exit my SM REIT investment anytime?
Absolutely. There is no lock-in period. It's listed on the exchange. So SM REITs will offer liquidity. You can buy and sell your units on the exchange platform.
Just like how I deal with my trading on the BSE or NSE.
That's correct.
What if I only invest in FDs today? Classic example from a retirement buy.
So here again, the issue is you will get your 6.5%, maybe you'll get 7. If you're in a high tax bracket, you'll effectively be left with 5.5%. The real returns are negligible, right? If you adjust for inflation, you basically are negative. So long-term purchasing power, you are definitely losing out. Whereas in SM REITs, given the tax-free nature of the rental income and the long-term potential for wealth creation, definitely we think it's a better alternative to FDs.
Wow. Well, is it complicated? Like we've talked about SM, is it complicated to invest in SM REITs?
It's not complicated at all. It's like investing in any IPO. You'll
Yep.
have a demat account. Platforms like HBIT will make it easy with digital first onboarding process. There'll be hardly any paperwork and no complexity.
Simple. How are SM REITs safer as an investment option?
I guess this is what we've already discussed before, so I won't go through it again. But in short, if you're looking to beat inflation without riding the volatility, the ups and downs of the stock market, SM REITs definitely offers a compelling income generating alternative with potential upside.
Agree. Well, I see that we're going to enter the Q&A session. Before that, I'd like to mention to Mr. Sultan Beg, who's raised hand. I'll request you to please, put your questions in the FAQs, Q&A, sorry, and we can talk it from here. Well, I have a first question from Mr. P. Roy, and we'll try to answer each and every question, which is mentioned over here. So please feel free to write all your questions. Mr. P. Roy, what is SM REITs at first place, please?
It stands for small and medium REIT. And it's typically the sizes we will look at is minimum 50 crores to 500 crores. REITs typically do above 500 crores. Small and medium REIT will do between 50 and 500 crores.
Okay. Mr. Madhavan happened to ask, how is SM REITs working to generate profits for retail investors?
So SM REITs effectively will have leasehold agreements with tenants already in place. So as soon as we acquire a property under the SM REIT IPO, you will start getting rental yields immediately as soon as the property is registered in the name of the SPV. So that income, those profits will start flowing in immediately, and these would be tax-free, effectively income for you. And as and when HBITS decides to sell the property, typically that will be between 3 and 5 years or 4 and 6 years. Any kind of capital appreciation will also be passed on to you as an investor.
So we have a question from anonymous attendee saying exit in SM REITs, which we have already discussed, but we like to highlight it again if required.
No, exit again is through the main board exchange, NSE or BSE. You can sell your units anytime.
Great. Mr. Swapnil Dubey has asked a particular question, which is basically of our one of the uh, competition who has found itself into a conflict of interest scenario, ended up getting into the radar of a regulator, and ended up returning the SM REIT license. How can someone of these issues end up impacting retail investors? How does HBITS ensure these are safeguards considering this falls closest to debt investment?
So I guess in the competitor's case, they firstly it was a property which was under construction,
Mhm.
and that was one of the main reasons they had a conflict. We don't do under construction properties at all. We do only completed properties which are pre-leased, which have received the OC, pretty much everything. There's a lot of due diligence which our lawyers do, whether it's Shardur Amarchand Mangal Das or CAM or Trilegal. So we make sure that the due diligence is done properly. In fact, in the past, we have been known to, if we did not find the due diligence right, we actually rejected the property even after spending a lot of money. So extremely, extremely careful around that. And that's one of the reasons we've not never had an issue.
Agreed. Uh, Mr. Ankit Gandhi happens to ask how the capital is appreciated in this product.
So Ankit, in two ways. One is we have typically escalation every year on rentals. Typically, escalation is 5% per annum or 15% after 3 years. Uh, Commercial properties are typically bought on cap rates. So if you buy a property now, you will say, okay, if you're buying at 8% cap rate, and if you sell after 5 years at 8% cap rate, typically because of the even if nothing changes, just because of the escalation in rent in 5 years, you should get a 25 to 30% appreciation after 5 years. Plus, if you're buying a property which is under rented, which we try and do, or you buy a property which is valued less than the market, then you get even more capital appreciation. So I would say it's a combination of these two things.
Great. Mr. Meet Jan happened to ask, with evolving landscape of remote working, will not demand for commercial scapes will fall eventually when globalization gradually increases?
No, I don't agree with that because what we've seen in India specifically, because these are properties in India, the homes don't allow you to work from home efficiently. So most of the people, I would say, in Mumbai, at least 100% people work in offices, I would say. In Bangalore, probably 70-75% people work in offices. So I don't actually see that happening at all. In fact, I would say the demand for offices today is insane. I mean, there is hardly any vacancy. Vacancy is less than 10%, and the demand for commercial property just continues to rise. So it's actually the other way around.
Very true. Mr. Anuj Setia happens to ask, time taken to get listed.
So we are looking at the first property. We are doing due diligence. We are hoping that between August end to October, we'll list our first property. But the due diligence takes time, so we have to be very careful about it.
I agree with you. Mr. Bag happened to ask, will this yield monthly returns? No, it will be quarterly returns. We'll just go to the next question. Mr. P. Roy happens to ask, how come the rent becomes tax free? Please explain.
So as I mentioned to you earlier, the way we are paying the rent to you is as a return of capital. So if you are given 100 rupees, that the capital continues to reduce. And that's how we show it as tax free. Obviously, all these things we'll be sharing with you. We have Ernst and Young, which is advising us on the tax part.
Mr. Madhavan, I happen to ask, you mentioned tax-free, but redemption capital gain is applicable. Well, we're talking about LTCG over here.
Absolutely, absolutely. We are looking at long-term capital gain after 1 year at 12.5%.
Right. Mr. Ritesh Jaiswal happened to ask how much one should invest.
So it all depends on Ritesh, what your capital is. My suggestion is in SM REITs over time, you could allocate 15 to 20% of your capital in SM REITs.
Mr. Sanjay Singh happened to ask, is there any SM REITs already listed on NSE or BSE?
Yes, there is one listed by PropShare. I think it's called Platina, which is listed either on NSE or BSE.
Mhm. Another question from Mr. Madhavan. When is SM REITs IPO coming? Which, of course, Samir mentioned, but any time between August till September. We're looking forward to that, and the property is under due diligence. Anonymous attendee happens to ask regulator roles in overseeing the underlying deployment of pooled money.
So as you know, we've been doing this in the unregulated space for some time. We already have 500 crores. So SEBI will make sure that all this money is only going to be going into the SPV. And like in any IPO, you cannot use the money for something else. The requirement of the money is to go and buy the property only. So it's going to be, so regulators obviously going to keep an eye on it. Plus, we'll have trustees who'll also be there, plus lawyers who'll be looking at it.
Well, REITs versus SM REITs, which offer more rental? Question by Mr. Naki Ahmed.
So SMD definitely will offer a much higher yield than REITs.
Anonymous attendee happened to ask, do I have option to select the property, and is there any basket of properties?
So we will be listing the properties as IPOs, and these will have different tenants, right? So the first property may have 2 or 3 tenants. We may list another property in another IPO. So you'll have a chance to put in money into any IPO you feel like. You'll have all the data, you'll have the prospectus, and you can then decide where to invest.
Mr. Prashant happened to ask, under which section rental income is tax free?
So I guess this you'll have to talk to your chartered accountant because the way we are structuring it as its return of capital and not as rental income.
And the same would be shared when we put
Yeah.
across our IPO. The details will be there before you invest.
Yes.
So, Mr. Nand Kishore happens to ask, can you please explain once again how, same question, how is the rental game positioned as tax free? So that will, of course, will be positioned, and you'll come to know moment you are investing into IPO.
Yeah.
Mr. Sanjay, I guess it's the same question. How the
Same question. Yeah.
same question. So anonymous attendee, will SM REITs of HBITS purchase via our demat account?
That is correct. You will have to have a demat account through which you will purchase the IPO.
Mr. Jindal happened to ask how to sell SM REITs on NSE. There is no script listed with the SM REITs, with the name SM REITs.
The name it's listed, I think, as Platina. It will not be listed as SM REIT. SM REIT is the nomenclature. But the project name I think was Platina, and it was I think listed as Platina. So we will have a name and it will be listed as that. Like for example, it's Reliance Industries, right? It's not equity, it's Reliance Industries. So you can sell or buy Reliance. Similarly, our SM REIT will have a name and you can click and buy or sell that.
Well, I'm hearing, so there's a question. I'm hearing everywhere that the SM REITs is listed on stock market, but I could not find out anywhere how to locate SM REIT unit.
We will. What we can do is you can approach your RM, and we'll be happy to tell you how to locate it on Bloomberg.
Mr. Ajoy happens to ask, Will churn of tenants and sometimes the office space is vacant for longer, will this impact returns?
So when a tenant leaves, and we typically have 6 months to find another tenant, and there is a chance that if we cannot find the tenant by any chance, and if it's vacant, yes, for that period, it will definitely impact returns. But we try and mitigate that as much as possible by finding a tenant quickly. But to answer the question, yes, if it's vacant for a longer period, yes, it will impact returns, like it would impact any property you would buy which is rented.
I totally agree. And yes, of course, we have to mitigate the risk. Generally, these tenants would have a longer lock-in periods, longer tenure, so that particular feasibility as will be mitigated to some levels. Mr. Sam, we happen to ask, what is the expense ratio as compared to mutual fund, and whether there is any mandate on deployment of money like mutual fund scheme?
So let me answer the second part first. The mandate on deployment, absolutely. We will be buying only that property which has been listed as the IPO. So that's the only thing we will be doing. Expense ratio, we nothing has been decided as such. As and when we come close to launching, we will let you guys know.
Mr. Anuj Sethi happens to ask, is it easy to get a buyer on exchange?
I would say, Anuj, it's an evolving product. So, initially the liquidity may not be as good. Plus, don't forget it's a property. Typically, people don't buy and sell units in properties. Uh, but I do foresee that over time, the liquidity will only increase. Initially, I think initially the liquidity will be there, then it could become a bit less, but then over time, I do expect it to increase.
Mr. Ankit Gandhi happens to ask, what is the life of this property? How, until now, how long the units are going to be listed on BSE or NSE?
So effectively, there is no real life, right? I mean, if we as HMITs decide not to sell the property for any reason, this could keep being listed on the exchange, and you'll keep getting your rentals. But as I mentioned earlier, between 3 and 6 years, or between 4 and 6 years, we will definitely want to try and exit the property to give you that IRR which we expect.
How much quarterly returns will we get for 10 lakhs for investment if it is tax free?
So effectively, it's 8% per annum. So quarterly, you will roughly get 2% of 10 lakhs quarterly.
Well, the next question from Mr. Hardik, is it linked to DMAT account?
Yes, you will have to have a demat account, which it will be linked to.
Okay. And Mr. Chandan happened to ask, where can we get more details about the IPO that are due in August?
So as soon as we file the prospectus with SEBI, we will be circulating the IPO details.
I have a question from anonymous attendee. What is the guaranteed of invested amount in case of any issue? What you will do in case lease over, etc., and will our return stop?
So as I mentioned to you, we buy only pre-leased properties. So you will know who's the lessee, you will know for what tenor. So you know that rentals you will receive. If the tenant leaves, then we as asset managers will help to lease the asset. As I mentioned earlier, if for any reason, God forbid, you can't lease the asset, then for that tenor, the rentals will stop.
Can be ticket size be less than 10 lakhs, like 50,000 or 1 lakh?
As of now, no, but we do expect it to actually come down over time.
Over
Also,
time.
someone has listed the prop share investment trust. It's called Prop Share Platina. It's I think listed as PS Platina on the exchange.
Well, we started the fractional ownership with around 25, 30 lakhs, came down to 10 lakhs, and now, of course, we can see another 3, 5 years going to that particular value. An honest attendee happened to even ask, if rental income is given as return of capital, what will happen to the NAV, unit price post rental income distribution?
So your capital in your hand will go down as an investor. But the NAV unit price will not, because that's the value of the property. If in 5 years' time, if we had bought it at 100 and if it's at 130, then it will be NAV will be at 130. You will have to pay tax on 130 minus the reduced capital. So it affects the capital in the hands of the investor.
And how often do you plan to exit each property investment?
As I mentioned to you, typical cycle is between 4 and 6 years. The properties which we are exiting now, one we are doing after 3.5 years, one we are doing after 4.5 years. So that's typically the cycle.
So is the rental returns fixed at 8%? If no, then what's the expected range?
No, it's not fixed at 8%, but you will know at the time of investing in the IPO what the rental returns are going to be. I would say the range would be anything between, I would say 775 and 875.
Well, Samir, I have a question for you, which is basically looking at the rate cuts and things, and you being in Singapore at this moment, and you watch the markets very closely. What do you foresee another 6 months, or maybe year, or maybe 5 years, where this fixed income or the market is moving?
So I definitely expect the US to cut interest rates. I think the US will cut rates by three times, 75 basis points this year and maybe 75 basis points next year. India rates also, as inflation cools, I think this year they'll probably cut another 25 or maybe even 50 and could cut even further next year. So the yields definitely are going to come down, which really benefit the SM REITs and the capital values where because we invest in property and these property values go up when actual rates come down. And I also expect over time the rental yields to come down more towards 7%.
Thanks. And there was another question which I always wanted to ask. While you were in Lehman Brothers, back in 2008, and it was picked up by Nomura Securities, how was it like? The product was more towards the mortgage, and how was it like as compared to the fixed income returns?
No, so the mortgage products obviously, and now also if you see in the US, the mortgage products continue to do well, extremely well. So whether it's RMBS or CMBS, obviously the US commercial market is very, very different from India, and they've gone through a very tough time for two reasons. One is work from home in the US was rampant. In fact, today also in on the West Coast in San Francisco, 70% still work from home or 80% still work from home, especially the tech companies. Whereas India, it's actually the other way around, where people are actually coming into offices. And again, because of the rates going up, that affected the mortgage business, commercial mortgage business. But now it's back with rates coming down, commercial property slowly making a comeback. And I do feel that over time, it could be a strong market in the US also.
Oh, great. So I have a question now from anonymous attendee. Since the NAV of the property is also dependent on the prices of the property, how often the price discovery of property conducted?
We will be looking at least once a year,
Hmm.
as mentioned by SEBI. If possible, we'll try and do it more frequently, but at least once a year.
What happens to investors investment and property if property manager like you decide to surrender your SM REIT license like your peer group?
So the investors can actually decide to terminate the investment manager like us and appoint any other investment manager. So you might decide, okay, you know what, we'll get JLL to become the investment manager. So typically in the non-regulated space, 75% of the people could decide. In this space also, I'm sure there'll be provisions for that. So your interest will always be protected, whoever the investment manager is.
Well, I have a last question for you, Samir, which is basically by Mr. Nitin Kumar. How many days does it takes for liquidation?
So earlier on, it would take between 30 and 45 days in the unregulated space. Now, because it's going to be listed on the exchange, my guess is sometimes you could liquidate it immediately, and sometimes it might take 2 to 3 days or 4 days. But I do expect the liquidity to improve.
Noted. Well, that's all about the from the Q&A round, and I guess there were a lot of questions which were beautifully asked. Thank you everyone to participate in this particular webinar. Exciting webinar on the SM REITs, FDs, and bonds. And thank you, Samir, again to be part of this particular presentation to enlighten us more about not only how the SM REIT works, but about the future, how the HBT is looking forward to do the particular business in the SM REITs.
No, thank you, Abhimanyu, and thank you, everyone, for joining this webinar. Thank
Thank you
you.
very much. Thank you, everyone. Bye bye.